but you touched on sustainable investing. I wonder if you're able to share some insights on rates of adoption of ESG or ESG-related strategies within the indexing space, and observations that you're seeing from a global perspective as that space unfolds.
Sure. Look, I think that I think when you're talking about sustainability, we're now seeing that in indexing. We're seeing that we're starting to see that in the active space as well. I mean, if you look at EMEA, there's about $2.1 trillion of assets sitting in sustainable funds, not just in indexing, but kind of across the range. Clearly, Europe is leading the way. And I think that part of that is being driven by regulation. You know, we've had regulation here, particularly in Europe. It's coming in the UK, SFDR, which is really driving that focus around labeling, et cetera. Those types of things, those types of regulations are moving the wealth management and the asset management industry more and more towards ensuring that there is a choice around sustainability. We're also starting to see real end investor demand across a number of countries. It does vary by country. Again, I think it's led very much by Europe, and in particular by the Northern European countries. And I think clearly we're seeing, you know, Europe driving sustainability more so than arguably we're seeing in the US. So, you know, if I look over the next 5 years or so, you know, the forecasts are that we'll see that $2.1 trillion number become something like a $5 trillion number. So it is a huge growth driver of the EMEA industry. And I think that is going to be driven by, as I say, regulation, growing investor demand. It's also going to be driven by product innovation. And I think this is an area where the indexing business has really led the way, starting 3 or 4 years ago. And from an iShares standpoint, if I go back about 5 years ago, we really set out how do we help investors who are looking for sustainability make sure that they have the vehicles that they're going to need. And that started out very much as, you know, arguably kind of screening out companies and exposures that investors didn't want to have in something like an ETF. But it's evolving quite quickly around how do you integrate it into some of these new strategies? How do you align with things like the Paris Agreement? And going forward, how do you offer clients the opportunity to have impact, which I think is going to be the next phase of what we're going to see from end investors who want to use their investments to see an impact, a tangible impact over time. And that's going to, I think, cut across index investing and also active and actually private markets as well.